Like the excitement of making money is fun in the beginning, but that starts to go away. And then you're really left in a spot where it's like, okay, what is the plan? What's going to drive me?
Welcome back to the Investing with Purpose podcast, where we explore the intersection of success and significance. We discuss alternative investment options from our experience buying hundreds of millions of dollars worth of real estate, but most importantly, how we're using that business to impact people in a positive way to leave a legacy that matters. Let's get after it. Welcome back to the Investing with Purpose podcast. Today, special guest. You might know him as my co-founder, my business partner, friend, confidant, longtime amigo, and the guy that I signed my first real estate deal with on the track of a front loader, I think.
Excavator.
Travis
Details.
Cotter. What's up, buddy?
Hi. How are you?
Welcome.
Thank you. I feel like I'm in Libman's realm over here.
You know, this is the world. This is always fun. So, guys, as you know, we usually talk to other investors. Travis obviously is an investor, and we're going to talk about how we are making the leap of faith into alternative investing. Our story is pretty unique in that sense. We're going to talk about some of our investment realizations. We're going to ask a couple of questions that you hear us ask most of the guests, but we're also going to pivot to give you a peek behind the curtain. What's going on right now in the market? We're going to talk about how we're underwriting deals, all the deals that we're killing and why we're doing it. So we're just going to give you a little bit of a peek behind the curtain as to why the market is what it is and how we're looking at it and what we expect from that. Yeah. So let's uncover some of the highs, the lows, the lessons learned, the deep why behind our investing journey, what has changed over the years, and a lot has. It's been 15 years now. I know. So why don't you take us back? 2011 is when we started our company. So Trav, just give us a little bit of background on how you got it started in real estate first.
Sure. So when I was in my early teens, I was doing construction with my stepfather. I was in a trench, and I would always see the owner, which was the developer that we were working for, always riding around in his Mercedes. And he would stand over the trench and just make sure we were doing what we were supposed to do. I'm like, what does that guy do? Like, I want to do what he does. So, long story short, that was always my motivation was Warren Wolf was his name. He was a mentor without knowing he was a mentor. I don't even know if he's still alive anymore. I wonder if he is. But he became part of Continental Properties.
Okay.
Which is a very large developer now in the Northeast. But yeah, that was the beginning of the real estate journey, and then started to get into finance and was doing mortgages and for residential, and then into flips, then back into construction. So it's always in the realm of subdivisions and development and construction, from building houses to then in California we were building pharmaceutical buildings. It was always real estate. Always came back to real estate. And then I met you, and the whole world changed.
Yeah, little known story. My wife and I adopted a puppy, and she was attacked by a dog when she was younger. And after this puppy started chewing on her a little bit, she got some PTSD, and I thought maybe we shouldn't have gotten this pit bull lab puppy mix. Somebody said, before you get rid of the dog, because we were considering getting rid of the dog, they said, you should go to this guy I know. He trains puppies. He's going to teach you how to walk a dog on a leash and do some stuff like that. And so we went, and that was your house.
Yep. That was 2008, late 2008, early 2009, I believe, wasn't it?
Yeah.
So the real estate market was not great.
No, it was not great. I was a real estate agent at the time. Travis still had his job running big machines, and it was, anyway, we got to know each other over a dog training class. And before it ended, it was 12 weeks, 10 weeks, whatever it was. Somebody was like, hey, you guys should talk. You're both into like the real estate game. And we did. We started writing a business plan. And anyway,
history.
Fast forward till now, we've done a lot of different things in real estate. We've done wholesaling. We've graduated to flips. We've done some subdivisions, built a couple 100,000 square feet of self-storage. And now $400 million plus in acquisitions in the total real estate world. We're still learning a lot.
Every
So,
day.
but that's what I do love about this game too, is it's, every deal is different. Every day is different. There is no autopilot, no automatic. It's, it's contemplative. It's creative. So, but as we have grown, from flipping to doing multifamily, what is your biggest takeaway of kind of what it took to level up at each level? Because we started with, not having two nickels to rub together, to doing wholesales because we didn't have any money, to bringing in some investors and doing some flips. And then now, we've raised almost $100+ million of private capital to
Mm-hmm.
go do these large scale deals. But give me an idea of, somebody that's just starting out, wanting to take that leap of faith into alternative investments or into something other than what they've traditionally been taught or known. What's the biggest couple takeaways of how do you make that leap?
That's a good question. I think if you're going into the commercial space from residential space, I think the intricacy of underwriting is very important, right? Understanding how the capital stack works, how the market affects the deal in all aspects, from the tenant base you're adopting to the market itself as far as rent growth, exit caps. There's a lot to take into account that you don't know how it affects the deal until you're in the deal, right? And that was something that we got to watch firsthand. Luckily, when we started, the market was good, right? It was a positive market. Rents were increasing. Expenses weren't out of control. We had a fairly good market to cut our teeth on. So I think getting into the market now is a completely different game if you've never been in the market before. So getting around people that can mentor you in a way on how to operate a property and how to underwrite correctly. So when you are operating, you're actually pacing your pro forma and your budget.
Yeah, the right partnerships have been everything, and underwriting and asset management, property management, the whole thing. How about mindset wise? Like, what do you think you have to be willing to do or not willing to do by taking that next level up from buying, our first deal was a 66 unit multifamily, and now we own things that are 982 units.
Mhm.
What's the mindset shift that we had to go through?
I think being comfortable with the risk you're taking by putting pressure on the numbers, right? Being able to pressure the numbers in a way that may kill a deal that you think is good. You need to be okay with that.
Yeah.
You need to be okay with walking away and saying no, so you can say yes to the deal that actually is gonna fit your business plan, and keep it simple. Walking into something that is a monstrous value add is probably not the best deal to walk into first, right? Because not only do you got to manage the property, but you got to manage your capital improvements, right? Which is a whole nother game.
Yep. And the reason for that is because you have some stabilization, some different types of debt. There's so much to learn and go into. So every investor gets their own playbook, right? They're all writing their own playbook. Some are chasing big numbers, others chasing freedom. What's been the thing for you getting into this game and continuing to grow and scale? Like, what's the driver behind the portfolio?
Yeah, I think the money burns off, right? Like the excitement of making money is fun in the beginning, but that starts to go away. And then you're really left in a spot where it's like, okay, what is the plan? What's going to drive me? And the most important thing I feel like in what we do is our tenant base. And if we can serve them in a way that changes their life, then that's what will get me out of bed in the morning, right? If we can affect them in a positive way and we can actually serve them in a biblical way that grows them and we're actually a value add to them, then I feel like the properties will reward us in the end.
Yeah. No, that's good. So I know the answers to these questions, but they don't. What has been a moment where you've had to choose between profits and principle?
Oh, we just did it, didn't we?
We did.
We just did it probably 2 weeks ago. We had an opportunity. It was a good opportunity. The market's solid, but it was developing condos. And one, we just don't know enough about condo development, right? Which I think that we would persevere just because of our drive and our willingness and want to win, right? So the deciding factor for us was that it didn't really fit what the why was. It didn't fit the plan.
Yeah.
And although it would have been faster money, right? I mean, there was a lot of cash on the table because the land was bought years ago, right? Way below value today, so the basis was solid. The operator slash developer was very well versed in condo development, had many successful exits in that market. So it wasn't that was kind of eating at us, right? It was the does it serve the purpose that we're trying to accomplish on a daily basis? And it just it didn't stack up.
Yeah. Yeah, and good on our CEO Jason Weaver for, letting us kick this around and then coming back to us and just saying, "Hey, guys, have we thought through the, the totality of this? Does it fit all of the check boxes of our core values and why we're doing what we're doing?" Another story that I told recently on this podcast too was one where we had a partner who we had already partnered with in the past. It was a multifamily deal. We did very well on that deal, exited quickly, made a bunch of money, and they wanted to pivot into the senior housing space, right? The silver tsunami is here, 10,000 baby boomers a day. And we love that space. We do want to get into that space. The key is going to be the right operator in that space, because operating multifamily and then operating senior housing with nursing and insurances and all that stuff is a different animal.
Completely.
Hospitality, it's medical, it's a bunch of different stuff. And so why don't you tell the story about how you came to find out, like, how did we do why were we going to do the deal at first and got comfortable with it? And then what happened in the middle of it? And then what was the result of that transaction?
Well, it was first off, the numbers worked, right? It made a lot of sense. There was a lot of components that we had to dive into because it would have been our first senior deal. So we had to get a good understanding on how to operate an asset like that, which again, like you said, it's a whole different ballgame. There's so many different components. It's like a hospital slash hotel slash multifamily, right? It's all of those in one. So our key components to any deal is the management side, right? So that piece of it is makes or breaks a deal, right? So if we're not on top of understanding on how that functions within the deal, we're leaving a ton of risk on the table there. So the big part of this particular deal was that the manager was a very seasoned manager in the senior space and had tons of experience and was already managing the asset
Yeah.
we were going into. So it was
Easy
kind of like,
takeover.
okay, right, exactly. It's not a ramp up period. Like it's just ownership switch, and now we're in the game. So we were still underwriting to that turnover and that possible shortfall in occupancy and performance for the first 3 months. But at the end of the day, this was a shoe in. Then we were probably midway through due diligence and we got on a DD call with the sponsor, and one of the managers brought up the fact that lightly dropping the fact that they were going to be taking over the management in-house because they were already vertically integrated on the multifamily side as managers, right?
Right.
So they dropped that in the middle of the call, and I basically stopped the call and I asked a bunch of detailed questions on how that happened. From there, we continued to get sold on the fact that there was um, a principal that was coming into the company that was very well versed in senior and had an unbelievable track record, and how they felt like they were going to save a bunch of money by bringing in this principal and managing the property in house. So from there, we got off that call, and I think I immediately called you, Stephen, and we had a long discussion, and we opted out of the deal.
Pretty
Came
close
out
to
of
the
the deal.
finish line.
Yeah. Well, we committed, right?
Yeah.
But that was a big piece of, you know, one of the bigger decisions that we had to make to walk away from a deal because we really wanted to get in the space, one, and
Yeah.
that was, putting our egos in check, like, uh, we're gonna go put our investors' money at risk at this point. You know, being in that unknown space already, really we had to be confident in understanding how that worked, and we weren't.
Yeah.
So I think we made a good decision at the time, and then come to find out later on that thank God we didn't get into that deal.
Yeah, because I think it got foreclosed or forbeared or something.
Forbeared, yeah. Yeah,
Yeah.
I think
So they
they're
went into
okay, but
forbearance, and which just means that they had some trouble with cash flows and things like that. So it didn't turn out as well as we were hoping or they were hoping. But it was interesting because somebody asked me this question. They said, "So they switched managers on you, and they were going to bring it in house. What's the big deal?"
it's a huge deal. It's
So
everything.
what was the biggest deal? Was it the biggest deal? Like, what was the biggest deal for you in that? I know what it was for me.
Well, it was two parts, right? One is that they made a unilateral decision on what they were going to do, and that just spoke to how they looked at us as partners. Second was that's a huge risk in something that they really don't have the experience in, and it's not just one person that manages an asset.
Right.
There's a large component of staff that needs to be hired, and it was just very risky to do, especially that soon, that quick within purchasing. And so we would have been the guinea pigs,
Right.
long and short of it. And
Yeah.
we weren't willing to do that.
Yeah. And, for me, and we had this conversation, it was like, all right, well, let's say we could get over the fact that they wanted to switch. That wasn't that big of a deal. The fact that they didn't come and tell us violated our third core value of respect. And, if you have done core values in your business or in your family, you know that in our business, this is how we put it. We hire, fire, promote, and demote on core values. And that partner clearly wasn't interested in adhering to those core values. And we've explained it to them. We were already partners with them before. So they knew how we did business. So, it turns out that we ended up having to pull the plug on that deal. But anyway, I asked that question because one, I don't think a lot of investors think through their core values, number one. And then two, don't figure out how to align their investment thesis with those core values. And Sharon, our buddy, says there's an inverse relationship between clarity and stress. Meaning as clarity goes up, stress goes down. When clarity goes down, stress goes up. And by defining your core values and the way that you're going to operate gives you extreme clarity, right? And it reduces your stress. Like we were stressed out because we wanted to do the deal. But on black and white, we already knew what the answer was.
Mm-hmm.
We hemmed and hawed about it for about 45 minutes, but I'm sure we already knew
Yeah.
that this wasn't going to fly.
Really good point. I mean, where core values come into play and they punch you in the face is when you violate them yourself, right? Like we hire, fire, and demote based on that. But we also hire and fire and demote ourselves based on how we react to things. And when you sit down in the morning and you just you get through your Bible study and you reflect and you pray and those things come rushing back to you, you're like, ooh, and you just feel so convicted. And I I value that though. I think that there's a huge lesson in being able to reflect on it.
Yeah. I'm reading, I'm listening to, as you know, I'm
Very nice.
auditory. So I listen to Audible, but I, wake up early and go for walks. And I've been listening to Craig Rochelle, Winning the
Love him.
War in Your Mind.
Mhm.
And
Writing it down.
to your point, what's good about, well, it's in our company Audible, so feel free to jump into it.
Thanks, bud. I'll wait till you're done so I don't get off your spot there.
Yeah, perfect. So but what's interesting about what you just said, right, is we do fall short. We do violate our own core values. But what is clear about that, what creates that clarity of that conviction is to have them defined. Because
Mhm.
then you know when you're outside of the guardrails and you know when you're inside the guardrails. And that reflection and that growth is what, growth is also a core value of ours. So if you're not recognizing those things, you can't grow. And, Craig in this book is talking about just recognizing the lies that we've told ourselves our entire lives and what truth is and where we have to dig those things out to battle, what internally is going on. But once you set those core values, it's much easier to say, well, this is why it's a core value. And this is how in my past or in my life I've violated them before. And we can't do that again.
Mm.
So, more so than just in business, I think it's so important to be able to level those things for ourselves and to know what the truth is of
Mhm.
what core values could be, because we could be deceived about what we think a value should be because it's not rooted in truth. It's rooted in our truth or our perception of what we've grown up and thought about and been taught, probably wrongly, right?
Mhm.
Not biblically.
Amen. Amen. Yeah. I mean, even from, your family's perspective and your marriage, right? Having those core values in place, not just for your business, but for your other components and sectors of your life I think is key to that clarity, right? To have that lower stress level in all of those sectors is clarity around core values.
Yeah. And so we'll pivot a little bit to, as you define those things and work those out, our business has changed alongside of those things,
Mhm.
right? So why don't you give us a little bit of insight in terms of like what has changed since we've been business partners in the last 15 years for you that are now shaping your core values and
Mhm.
kind of more of a faith-driven, impactful, purposeful investing versus what we were trying to do when we were flipping houses, just put a paycheck on the table.
Yeah. Yeah. We were trying to make a return was the goal. Um, Jesus has changed me.
I know it
I
again.
was saved on my birthday, 2017, April 9th, 2017. I was saved, and thanks to this business and some other folks in my life, they stayed consistent with me and didn't give up. So grateful for that. But yeah, so that completely changes the trajectory of how I structured core values in my life and how I saw my purpose, right? Like, and you're always doing that, right? You're always reevaluating your purpose. And am I fulfilling what God wants out of me? Am I following those breadcrumbs? And when you start to see him come into your life, and not to get too deep on this, but you start to see him come into your life and you start to see where he fills the gaps in, right? Because there's those things that that you're naturally good at and those things that you're not. But when he starts to fill those gaps in, almost makes everything kind of seamless to where you recognize things that you couldn't see before and you have clarity on now that help you move through his path, right? Even though you aren't skilled in those certain areas, he
Right.
just fills in those empty pockets to be able to get you down across, almost building a bridge for you, which has been amazing to see in my life. It's changed my family life, it's changed my work life, it's changed eternity for me, and I truly believe that. Um, yeah, it's that's probably the biggest change that this business has given me,
Yeah. No, it's been
which is a
incredible to
journey.
watch. For all of us. I mean, you know, it's been such an amazing growth curve, and and now it's where it's landed to. One, it was like we wanted to give, and we did, and we gave a percentage past the tithe to different nonprofits, and we were able to support different nonprofits that affected 50,000 lives. And now the Lord's encouraged us to sow back into the communities because we own the mission field, and there's so many people out there that still need to hear the good news of the gospel, and we own the mission field. So we have a
Unbelievable
captive
audience.
audience.
Unbelievable. I'm so
So that's
grateful.
so that's been cool, and that's a lever we keep pulling. Like different things keep popping up, and Celia's doing an amazing job of running that. She'll be a guest on here as well to kind of share her heart on how
So good.
she's spearheading those initiatives with the tenants. So I think it's so important for investors to understand that they can make temporal and eternal returns. And the only reason we get to teach that is because we had to learn it first. We went to making a temporal paycheck to growing into, okay, let's buy millions of dollars worth of real estate, hundreds of millions of dollars of real estate. So we're making temporary returns. And then how do we leverage that to create eternal returns, right? The Bible says, where a man's treasure is, his heart is also, in Matthew. And it's like, man, if we can continue to sow back into these communities and sow back into those people, then we get to be the hands and feet of Jesus while serving those communities. So I'm just grateful. I feel blessed that we're able to do it. I think we're just getting started. I think we have many, many thousands of more families to serve, and hopefully that becomes a part of our legacy in the business, right? Even when we're gone, people can look back and say, oh yeah, this is a pretty cool legacy. What do you think about when you think about legacy? Obviously we think about family, we think about the business legacy, but like what are a couple of things that pop out to you about how we are shaping those things or how the Lord's shaping those things?
Yeah, I feel like we're just getting started. I feel like there is, I mean, especially watching what Celia is doing and how God's kind of working her life, and we're starting to gain a lot of momentum in the way of kind of making it our own.
Yeah.
And I think that we have good tools. I think that they can get better. I think once we
Well, that's the
once we
entrepreneur in you.
yeah. Yeah, no, there's always growth, and that goes back to the point of what we're trying to do and what the why is, right? That making money and making returns are great, but being able to change people's lives in a positive way is, I mean, it's endless, right? There's no shortage of need in that. And how can you change people's lives in a way, just by them living in your apartment complex? So it's kind of endless in a way that, is exciting, and we get to put our own spin and creativity with, through seeking prayer and making sure it aligns with His plan. So it's exciting. I think there's a lot more to come with that, but it's right now it's in its infancy stage.
Yeah. Yep. And getting bigger and better every day. I'm excited to see where it continues to go. And we're working with other faith-driven entrepreneurs around the country that are doing different things, and we'll adopt some of theirs, and hopefully they'll adopt some of ours, and we'll just continue to lock arms with the right people to continue to grow it.
We love blueprints are great, so it makes life a lot easier. And then we just tweak it a little, right? We want a closet here, put a garage over here.
All right. So we're going to do two. So usually at the end of the show, Trav, we do like a rapid fire, little rapid fire round. So we're going to do two though. We're going to do two of them for you, because one, we're going to ask some of the cool investing questions that I like to ask, but then two, we're going to do a little rapid fire, like what's going on in the market. Let's give some people some of the insight as to what you're seeing and stuff like that. But let's start with kind of the mix of fun and deep questions that we have. Ready?
Sounds good. Yep, go.
All right. So just gut reaction, no overthinking it. If you could have lunch with any investor, past or present, who would it be and why?
Probably. Can I pick two?
Yeah, sure. Why not? It's your
It's
show.
David and Jason Benham.
I like those guys.
Just because I love them, and we always have great conversations. They're always
Shout out.
fixed in my mind for lunch.
Shout out to the General's Tent. We're going to be having dinner with them soon, so make sure you check out David and Jason's Benham's books and podcast and all their good stuff that they have going on. Biggest money mistake you've ever made?
Investing with not proper due diligence.
Yeah. Ready, fire, aim. Ready, fire, aim is good for business building. I don't think it's good for investing.
It's not. It's not. So, hey, you live and learn.
Money doesn't love a fire drill. Quote or Bible verse that guides some of your investing decisions? Wow, that's a tough one.
I just don't know the verse, but it's slow to react. What is that verse?
Yeah, something to do with patience. I bet you it's in Proverbs.
It is Proverbs. It's definitely Proverbs, but I got to look it up now. But
all right, when we find it, we'll put it in the show notes for you guys.
There you go.
All right, if you had $10 million to invest tomorrow, what's the first thing that you would do?
Due diligence.
Yes.
I'd find a deal.
So that's a good find a deal.
it would be real estate though.
Yeah, for sure. Dream investment, something that you'd love to be a part of one day.
I'd love to be part of an AI growth company in some capacity.
I mean, it's not a matter of if, but when that thing is going to continue to take over. So me too. I love it. All right. So let's talk a little bit. We won't make this super, rapid fire, but let's talk a little bit about the realities of the market right now. We've been, COVID, compressed cap rates, interest rates tripled. Trump's now in office for the last 4 or 5 months. We got tariff wars. So let's just start real high level, top of the funnel. What are you seeing in the market the last couple months?
The last couple of months has been a ton of uncertainty. I think that's I think everybody understands that. But from the real estate side, honestly, the past couple weeks have actually been pretty positive. You're starting to see lenders come back and to place money. Forecasts that are, positive for 26 and 27 for rent growth. Certain markets, I mean, there's projections of, 4 to 5% year over year increases in certain markets right now for 2026, 2027. You're starting to see more leverage opportunities for debt, going from 60, 65% to 70, 75%. Um, More lenders are starting to want to get stuff on their books. You're starting to see equity get busier. I really feel like deals are still tough to come by, but I think buyers, or should I say sellers, are looking for certainty of close because I think there's distress there. So if you can give certainty of a close, right? And you're not, syndicating on a deal with a weak track record. I think you can probably get a good price on a deal with certainty of close. So if the cash is in the bank and if you're going in cash with no debt and you don't have to raise the money, I feel like you can probably get a screamer right now. But yeah, I feel like there's more opportunity in the market right now.
It sounds pretty optimistic. That's not what I'm seeing on the news.
You won't see that on the news. They're reflecting on what's happened in the past, right? And then everything happening that's happening politically, right?
Yeah.
They want fear. They like the fear.
Well, Warren Buffett once said, be greedy when everyone is fearful and be fearful when everyone is greedy.
That's right.
So we're kind of in that middle ground right now where people are freaking out. The market has had the most volatility in the last 3 months than ever before.
Mhm.
I mean, the swings are insane.
That's crazy.
It
That's
is
all emotion
crazy.
though, right?
It's all
And
motion.
you say it too, the markets, the equities are what? 10% of the population?
Yeah. Yeah. So this is interesting. If you don't know this, folks, 95% of the equities that are purchased and traded on the stock markets are owned by 8% of the population. So you guys are all watching. I understand that it creates fear and you're panicked, but more than likely, if you own a lot of those stocks, you're part of the top 8% of the wealthiest people in the world. But why that's important is because everybody talks about how, we're killing the economy and we're killing retirement. It's like, well, if 92% of the people don't own those things, how is that happening?
Mm.
So, I think the reports, the deep dive, the education, not the clips on TV or Instagram or whatever we watch, so important. That's why the deep dive is so important, because everybody's like, how are you feeling about the market? I feel great. I mean, right now I feel more excited. Now we haven't done a deal in 5 months, right?
Well, that's to the next point of, yes, there's opportunity. We're still stressing deals. Like
Yeah.
we're putting the screws to deals to really understand what is the baseline, right? If everything goes the other way, right? Because there's so much political volatility between tariffs and interest rates, if everything goes the other way, what does the deal look like?
Yeah. Yeah. Because
And
hope
are we
isn't a
willing to take that
strategy.
risk? Yeah, exactly.
So, one of my favorite, and this has become my favorite, right? I'm not a super detail oriented guy, as many of you know. Tops of the waves are fine for me. But when I look at models now, the sensitivity testing is like one of my favorite graphs, one of my
Great.
favorite charts. And what that is sensitivity to the interest rate, right? Between 4 and 6% or 7% or 8%. The
Mhm.
sensitivity between cap rates at 5% or 9%. Give me the whole idea of how this deal can go. We know how we want it to go,
Mhm.
right?
Yeah.
And that's a lot of what you're seeing right now too, right? You've looked at, I don't know, what'd you say, 25 deals in the last 2 weeks?
Yeah. Yeah, 30 plus in the past month. And you run through those sensitivities. You run through year over year rent growth, expense increases, cap rates,
Somebody sent me a
interest rate.
deal. I didn't even send it to you. Somebody sent me a deal with a model, and it was showing 4% to 5% rent growth per year over a 5-year period of time. Well, guess what? If I can get 5% rent growth for the next 5 years, and that's a 25% increase in rent in that particular area, I don't have to be a good operator, right? I'm just going to win on that. But you can't
Yeah.
bank on that. That's a ridiculous projection, especially as inflation has now fallen to almost zero again. So what I love about multifamily real estate is, as you know, as the inflation was going crazy through COVID, rents were going crazy too, because a big economic indicator of inflation is housing costs and rentals going up. And now everybody's saying, well, inflation's coming down. That's really good. Well, yes, it is for the overall economy. But for rents, that means rents are going to stay a little bit flat or track inflation. But I mean, this month, I think it was 0.3% housing inflation. So we can't be underwriting 5% rental increases.
And you know, there is scenarios, right, where you possibly could do that. And if you're that far under market and you're 100% occupied,
Sure.
but there's space for that, right?
Yeah.
And sometimes that is a possibility, but right now with the deal flow that's out there, it's a tough find.
Yeah. I mean, we're seeing some deals for sure that are showing us that, the average rent in this particular complex is 15% below value. Okay, cool. So now we know if we get to 15% over the next 5 years, it only brings us to market today. Well, that's a great scenario.
Good
So,
hedge. Yeah.
anyway, I think it's just important, for listeners to understand that when we're looking at these deals, there's so many components to it. And, funnel in which we look at things through is core values of our co-sponsors. Number one, experience and track record of those said sponsors, right? Because if they don't align with the core values, who cares what the track record is?
Mm-hmm.
If they pass that test on the track record, then we start to get into background, history, track record, the exit numbers, but then we get into deal metrics, right? Deal metrics are now talking about how do you underwrite and how are we underwriting versus how they're underwriting. You had a great call today with one of our co-sponsors, and I mean, you looked at his underwriting, you did your own underwriting, and you were like, nope. And then you guys jumped on the call, you started stress testing, you started talking through some things, and there's still opportunities, but we do have to be conservative. And that's, I think, everybody says they're a conservative underwriter, but it's not until you see an underwriting packet that you know if somebody is or is not.
Well, yeah, I mean, the conservative side has come with not being conservative enough, right? And walking into, poor markets that you just never know what's going to happen, right? There is a level of risk that you have to take, right? And it's not, you can never completely take risk off the table, but you also need to understand, okay, what is baseline? And with where we are in the market to the term that we're going to hold this deal, what are we willing to risk? Because you have to come to, you're never going to rob a commercial deal, right? Like you're never going to be able to just, find the level of distress that you need and not have a buyer that's going to push that deal closer to a market price.
Yeah.
Right. So it's, you have to be reasonable and you have to hedge risk the best you can with where you're going to end up with on a purchase price. Does that make sense?
Yeah, for sure. And that's a big difference between single family and multifamily.
Huge. Another
Is
game.
finding a distressed $200,000 house not too hard. Finding a distressed $200 million property much harder. So, I think it's just important for people to understand what we're seeing, how many we're seeing, how many deals we're seeing. And look, we still feel confident that we can execute on 4 to 6 deals this year, even though we haven't done anything in the past 4 months. And that's because we have a lot of capital sitting on the sidelines that are saying, yeah, we want to get out of the volatility of the market and at least diversify a little bit into tangible assets over the long term. And that's also because we have great relationships that are continuing to be built and we're seeing a lot of deal flow. And, I think from when we used to operate deals to now as being a co-operator or a co-GP in these deals where we're funding and then managing and being an asset manager, the difference is that we can find a lot more deals with a lot more partners than if we were just to build out our own acquisition team like we used to do. And that gives us a lot more things to say no to and a lot more things to hopefully say yes to.
It's got to be the right deals. And the way that we get our deal flow through these approved sponsors that run through a pretty vigorous vetting process with us, especially now, we've built out really, and if anybody wants to nerd out on this, we can jump on another call and do this, but we're we're in the middle of and have created a really cool, seamless process for our sponsors to run through. They don't feel like it's painful, but it is painstaking on our end to run through everything to make sure that these are the right partnerships to get into, because it is the most important piece of our business.
Yeah. No, it's great. Well, Trav, amazing conversation as always. You know, you and I could sit on our couch and have this conversation without a mic in front of our faces,
Yeah.
and it'll be the same. Well, if you need to find Travis, you can't do it. You can find me though at investingwithpurpose.org. we keep him in his lane. But if you go to investingwithpurpose.org, you can sign up for our investor club. You can get our free Investing with Purpose guide. And just learn more about what it is that we're doing, the deals that we've done, and how you can align your core values with your investment thesis as we continue to try to do every single time. If you have found value in these conversations, would you subscribe and share with someone who needs to hear it? And again, if you're ready to align your investments with your values, go to investingwithpurpose.org, and we will see you guys next time. Thanks, Trav.
Thanks, brother. Love you.
See ya. Thanks for listening to the Investing with Purpose podcast. Would you do me a favor and subscribe, leave us a review, and to learn more and partner with us, go to investingwithpurpose.org.